Hi, this is the SPX Market Outlook on Monday, October 21st. I should be looking for a longer term chart, but let's start with the one that is displayed, the 1 hour chart. You can see that we've been now moving in a upward channel, even though the down signal or short signal is still valid. So we can assume a continuation of this trading range with the market bumping on 3000 or slightly higher, maybe moving to test all-time highs, and we have a very strong resistance in the 30-50 area. This is a very strong resistance area, and we have here, if we interpret those lines, we've got something we call sometimes the stall level, and the stall level is actually on the all-time highs. So I would assume that we have this channel giving us a support that is increasing and that could trigger some selling there to this level, so 2960, which should be fairly strong. I haven't plotted the fibs here, but because let me switch off this. So if we plot a fib from, let's say from here, the first salient support would be exactly in the same area, 2960, 2950, 2936. So we've got quite a number of support and probably some acceleration if this channel would break. So I would assume this is still the same bullish congestion with the possibility of a more abrupt move downwards on this channel breakout, but then to be cushioned by the fib supports here. And on the upside, if this resistance breaks, probably stalling on 30s or basically around all-time highs, and maybe attempting to go higher, although I don't think there's much steam to go higher at this point. So this is the short-term outlook. If I now switch to a 4-hour chart, here the upper channel looks steeper, but we also have a sell signal here. So again, the stalling should be confirmed and the levels are about the same. Note that we can sometimes, some researchers or quants do analyze what we call the natural gradient, or yeah, it's actually called the natural angle of descent or ascent, and this again looks a little bit too steep. You can see, for example, if we look at earlier, somewhere in July, it was a more steady and reasonable angle of attack or angle of ascent, and this one was too steep not to call for bounce backs. So this one is slightly above average, so probably calling for consolidation, and again we would be watching the channel support. Now if we look slightly longer term on a daily chart, this is an error, but let's not look too much in the channel being drawn differently on this higher time frame. Here we're still long, so basically we have on the longer time frame a long signal, so of course it is still bullish. That's why the overall trend is still a bullish congestion. And again, if we look at the shorter time frames, let's say that on a daily chart, bullish adjective is stronger, and in the 4-hour and 1 hour charts, the congestion substantive is actually more prevalent. So bullish congestion, I don't anticipate actually an abrupt move in the short term, but this is probably as good as probably a 3-day, maybe for a weekly outlook, pending an update next Monday. I suggest that sometimes you go back to the previous outlook the week before and test how accurate or inaccurate my outlook has been. Thanks for watching, and for those who are on my Rhino Slack, I'll be there at the open today. Bye for now. You have seen that I switched off the strategy that is built on my various proprietary indicators, and again, this market outlook is meant to be of value to non-directional traders. That being said, those who watch also my development of an options analysis software called SOAP have seen that I plan to include some directional indicators in the future. They are ready, just need to be ported. They are basically here. So this is probably work in progress because the actual order management and position management probably would need to be tweaked a little. But if you are a directional trader, you know, or you should know, that you must limit your degrees of freedom to a bare minimum for better stability or statistical stability. So for those interested, this is on the only inputs. So basically the number of contracts doesn't really count. So you have only two parameters, a minimum ATR, which is a proxy for measuring volatility, and a length or number of bars, historical bars you watch, like 12 bars for here. Okay, so this system should be fairly stable. And as you can see, the equity line is looking good, profit is okay. And the other stress test when you develop a system like this is that it should work well or sufficiently well across time frames to make use of the fractal nature of market. And if I now, this is now on the 1 hour chart, if I look how it is calculated on a daily chart, the equity line is just as good or better. So again, I invite you maybe to subscribe to the channel, maybe click on the bell to be alerted of new videos, and this is something I've got in the pipeline for SOAP at some point. Okay, thanks again for watching, and for those on the Rhino Slack, see you a bit later. Bye for now.